All right, my friends, hello and welcome back to another video here on Rebel Trading. In today's video, I have a cool intraday strategy. It can be used for swing trading, but mostly it's in and out within a day. So it's good between the 15-minute and up to the 4-hour. But in today's video, I'll be using the 1-hour time frame. As always, this strategy works for crypto, Forex, and stocks. I'll be using it on the Euro US dollar trading pair. This strategy works best as a trending strategy so that we're going to identify a trend and we're going to stick with it and profit as much as we can. Then we find another asset that is trending and we're going to use the same strategy with it. Also, if you stick around to the very end of the video, I'll show you how to set up trade alerts for this strategy. The very first indicator that we'll use is the CCI. I'm going to click on the very first one. The second indicator that we will be using is the moving average ribbon. Click on that. For the CCI, we're just going to leave the settings how they are. Feel free to change the style to your preference. For the MA ribbon, we're going to go over to settings. On inputs, we're only going to need 3, so we're going to uncheck the very bottom one. As for the length, we're going to change all of these to 34. The very top one, we're going to make sure it says high. The second one will be close, and the bottom one will be low. And as far as settings are concerned, that is all you need to do. Also, if you guys are liking this video so far, please smash the like button. It really helps me grow my channel. I'm getting closer to my goal of hitting 1,000 subscribers here on YouTube, so please feel free to hit the subscribe button and also click the notification bell so you can get alerted every time I put out a new strategy. All right, so for this trading strategy, the first thing that we're going to identify is where the price action is trending. So as we can see right here, the price action is closing above the EMA lines, so that we can see generally within this time frame, we are in an uptrend. So we'll be looking for long positions. The next thing we're going to be looking for is for the price to enter into the very top line or in the middle. However, if we see the price break out through the bottom, we will not be taking a long position because it can either indicate that we are entering a downtrend or that the price is consolidating. So we will not be taking a long position. So as you can see right here, price action is consolidating a little bit, but it did not break out down the very bottom of the EMA ribbon. So what we're going to be looking for is for a green candle to close above the very top ribbon. As soon as that occurs, we will go down below to our CCI indicator and we'll see if the value is above 100. As soon as that occurs, we can take our first long position. As for the stop loss, I'll set it points down below the ribbon. Depending on which broker you use, your spread might be a little bit higher, so you might want to leave more or less space depending on which broker you use. As for the take profit position, I always take at least a little bit at the 1.5 risk reward ratio. After that happens, I move my stop loss up to the break-even point. So if the trade goes sideways, I do not lose a significant amount of profit. This will massively prevent any drawdowns in your account. That's our main focus, is preservation of our capital. Now, for closing out the remainder of the position, there are a couple different things that you can do. One thing you can do is you can wait for the CCI to re-enter the 100 channel. After that closes, you can get rid of the remainder of your position, or you can wait until the price action touches the very top of the ribbon. Depending on which one of these occurs, you can squeeze a little bit more profit out of the position. Once again, this is a trending strategy. So we're going to catch the trend and we're going to ride it as much as we possibly can. As you can see here, we caught quite a bit of profit from this intraday strategy. We held on to it for no longer than 1 day. However, there are way bigger trends that we can spot using this strategy. So we're going to look for another one. All right, as we can see here, we got a pretty solid long position. Actually, we have multiple positions. Again, if we saw price action break out below the bottom of the EMA ribbon, we will not be taking a long position. However, if there are 5 to 6 candles away from that position, we can take a potential long. Then we're going to wait for the CCI to break out above the 100 level. And as soon as that occurs, we can take our long position. Once again, we're going to stick the stop loss a few points down below the ribbon, and we easily hit the 1.5 take profit. But you can see if we leave this position open, there was a massive trend throughout this week on the Euro US dollar trade pair. So although this trade lasted about 2 to 3 days, you would have caught a massive profit using this strategy. And if you go back, there are multiple instances where you can both take trades close them, and re-enter to your preference. All right, so for our short positions, we're going to be waiting for the opposite to occur. We're going to make sure that we don't have any significant breakouts on top of the ribbon. As you can see here, we still have wicks with short candles staying within the grid range. So although this is a high risk trade, we can still take our potential short position. Then we're going to wait until the CCI value is below 100. After these things have occurred, we're going to take our short position, set the stop loss a few points above the swing high, and we did catch our 1.5 risk reward ratio on this trade. But again, you can hold on to the position until it re-enters the channel. As you can see here, if you waited on that, you could have either held on to the position until it continued to trend downwards, or if you wanted to reduce your risk, you can set the stop loss a little bit above the ribbon. That way, if it breaks out and the trend reverses, you can prevent the trade from losing. But even if your stop loss hits, you can see here that you would have had multiple shorting opportunities on the way down throughout this trend. All right, so as far as setting up trading alerts, the best way that you can set up alerts using the strategy, we're going to right click on the CCI. We're going to click add alert. We're going to make sure it says crossing. And then on the value, we're going to make sure that we have two. One for negative 100, and then we're going to make another one for just 100. Then we're going to make sure it says once per bar close. Otherwise, you're going to be getting multiple alerts whenever the value enters or exits this channel. So every time it enters negative 100 or positive, you'll be alerted on whichever device you use. After that, you can identify whether or not the trade is within the parameters, and you can take the trade accordingly. As always, make sure to use proper risk management and do not risk more than 1 to 2% per trade to make sure that your drawdowns aren't too excessive. I really hope you guys found value out of today's video. I really enjoyed this strategy a lot, and it can easily help you grow your Forex or your trading account in general. Please click the like button if you found value out of it, and go ahead and comment down below if you have any suggestions or ideas for future content that you would like me to post. Thank you again for watching, and I hope you guys enjoy the rest of your day.